Hello, everyone. This is Blaine Markham, Chief Trading Strategist, coming to you with my weekly market update, breaking down for you what I'm seeing across the markets. A lot's been happening this week across the markets. I'm sure you've probably seen some of the volatility going on, so let's go ahead and hop into the charts so I can get into my breakdown. So what we're seeing here, of course, is a continuation of some of this kind of weak and unimpressive trading that we've been experiencing since midway through February. We've been talking about it here in recent weeks, about how we've continued to see some weakening across the board. Still seeing the major indexes here in the U.S. continuing to carve out this series of lower lows and lower highs. And today actually was a very significant day. I'm recording this here on Thursday after the close, following the Thursday session. And, it's something we've been talking about here at Markham Trading and Hughes Optioneering for several weeks now. Something that traders really need to be paying very close attention to is that this index, given its trajectory to the downside, and also with our green line here, that's our upsloping 200-day moving average. We've been saying for weeks now that this test that we just had happen here in the past couple trading days, yesterday and today, was on the horizon, was something to be watching out for, and now it's here. We can see the S&P 500 actually took out that 200-day moving average in today's trading, actually closed down below it. So you can see that's today's action right there. You can see we closed just a touch above 6,600. And of course, this is notable because, again, that's below that 200-day moving average level there. And we've traded above that level ever since coming out of the lows of April. So you can see dating back, looking back almost a year ago on the chart, you can see we're coming out of those April lows. We popped above it midway through May. Ever since then, we've been trading above that 200-day moving average in a confirmed long-term uptrend. Of course, we had some very strong price action last year. So the index was trading very far and well above that 200-day moving average. Now, the question, this trend is really starting to come up. It really is on somewhat more of shaky ground now, given that the index has taken out that 200-day moving average and confirmed it with closing below it. So we're certainly going to be continuing to watch that key support level here in the coming trading sessions, because if we continue to get some confirmation, continue to get additional further closes below this 200-day moving average, well, that's likely going to go ahead and confirm that we are, in fact, going to further break down below this, and we likely have a little bit larger correction on the horizon. And I think, frankly, that is where the index is going to be going. There's a lot of uncertainty. There's several major headwinds right now. We're continuing to see the price of energy skyrocket. We're seeing the VIX continue to remain elevated and trending higher. We're continuing to see treasury yields and interest rates rise. This is a very, very tough mix for stocks to perform well in. And you're seeing the expected result from stock prices. They're continuing to sell off. So until we get some relief on that front, I think we are going to continue having the bears remain in charge of this market and see some further downside to go. Below the 200-day moving average, some levels that we are watching here is, of course, dating back to November of last year. We had that smaller correction in November, about a 5% sell-off last year. You see we closed just about 65.40 right here on the S&P. So that's just a little bit lower than where we are right now. We traded down intraday today to just about 65.50. So that's, again, going to be another level of support down below this market. But, if that level does not hold, we certainly could be looking for a bit further downside to go, because there's not too much technical support between that level and then the next levels of technical support below this market. So, again, we're going to be watching that level very closely over the next couple weeks. And I just want to point out here, too, just in the shorter term, you can see this very clear series of lower lows and lower highs that's developed on the S&P. That trend is still remaining intact. We're still making that series of lower lows and lower highs and continuing to see some very stiff overhead resistance here. We had talked about several different levels above, when we were trading near the all-time highs and started to struggle with the 50-day moving average. And now we're starting to really see some strong overhead resistance right here at the middle counter channel, which is just simply a 20-day exponential moving average. You can see we've traded up and tested that level numerous different times over the past month and a half. Continue to fail at that level. Every time we trade up near there, that's when the rally begins to fizzle out. We start to run out of any buyer demand to continue to buy up the market at those higher prices. And so until we're able to reverse that trend technically on the charts and actually break through that middle counter channel to the upside, get some confirmation of reversing the series of lower lows and lower highs, that again is just another technical signal that we're likely in for some further downside to go. Now, certainly, while the technical picture just with the headline index here has certainly worsened here in recent weeks, and we've been all over this, pointing this out in our weekly market updates, I want to go ahead and point out to you something that's kind of going underneath the surface of the market, really kind of taking a look more at the market internals right here. This is something we were benefiting from earlier in the year and for much of last year when we had some broad participation. We started to see that market broaden out, saw the equally weighted S&P 500 start to rally and, actually start to outpace and outperform the headline indexes. But we can see that we've actually had a significant and sharp narrowing of breadth across this market. We're seeing fewer and fewer stocks actually continue to participate to the upside. And so we're actually looking at in the chart right here, there's two different ones here, of course. And so our top chart up here, this is actually looking at the percentage of S&P 500 stocks that are trading above their 50-day moving average. And then this chart down here is just looking at the percentage of S&P 500 stocks that are trading above their 200-day moving average. So think of it like this. These are going to be expressed in terms of a percentage, but think about it. This is showing the number of S&P stocks as a percentage that are trading in short to intermediate term confirmed uptrends. And then the one down here is going to show the percentage of S&P stocks that are trading and long-term confirmed uptrends. And so looking at our top chart, you can see, when the market was near all-time highs, we had some really broad participation just a couple months ago, and then also too for much of last year. You can see at times we had 70, even close to 75% of S&P 500 stocks participating to the upside, trading above that 50-day moving average in that short to intermediate term uptrend. You can see here just in the past couple of weeks that has substantially declined. You can see, just a couple of weeks we were right up above 65% of S&P 500 stocks, trading really healthy, had some really great breadth going on underneath the market. Here we are today sitting just above a quarter of S&P 500 names actually trading in those short to intermediate term uptrends. So you can see we've had some substantial price degradation on the price action charts across the board. And of course, looking at the bottom too, similar effect going on down there too. We're starting to see a lot of names actually break those confirmed longer term uptrends. Again, just a couple months ago, we had north of 65% of S&P 500 names trading above their 200-day moving average, confirming that they were indeed in a long-term uptrend. That is no longer the case. You can see we've actually now dropped down below 50% of the index, now trading in a confirmed long-term uptrend. It's now sitting just about 48%. So less than half of S&P 500 names are still holding on to that long-term uptrend. And that's actually the lowest level we've seen on that chart dating all the way back to June and May of last year. So certainly some additional evidence here to confirm for you that, we are likely looking at a little bit of a correction here on the horizon because, again, we're seeing the price action across the index continue to be quite poor, still making those series of lower lows and lower highs. We're seeing some major cracks start to form in the internals underneath the hood of the market. So because of all this, we're certainly starting to reposition and refocus on trying to spot some additional opportunities to trade to the downside here in the weeks and months to come. But with that said, that doesn't mean that there still are not some great bullish opportunities out there too. There are still some very minor pockets of the market. You think energy, there's still some pockets of the utilities that are performing really well. There's also too some very narrow pockets of technology that are continuing to perform very, very well. And so we're also continuing to focus on those also because they're still presenting some very powerful uptrends. So I'm going to go ahead and show you one of those examples here next. This is actually one here that we focused in on recently in our Champion Trade Alert service, and we've actually sent out several different trade alerts to our members here recently for this stock. But actually what we're looking at right here, this is a ratio chart first. So before we hop into the actual price action chart for the stock, I want to look at the ratio chart here just to show you the really strong relative performance that the stock is having. But the stock ticker we're looking at here is actually COHR. This is for Coherent, and we're actually looking at in a ratio chart comparing the price action and performance of Coherent to that of the broader market, just looking at the S&P 500. So this is taking the performance of Coherent, the stock, dividing it by the S&P 500. And of course, all you need to see here is this line sloping up, because in that case, with this line sloping up, as you can see that it has over the past year, what that is indicating to us is that Coherent is continuing to very strongly outperform the S&P 500 in the broader market. So what this means is that Coherent has very strong relative strength compared to the broader market in most stocks. And because of this, this is one of the stronger trends in the market. Thus, it is one of the ones that we want to focus in on and target and trying to spot great trade opportunities for our members. So that's exactly what we've done. Whether we're looking at bullish or bearish setups, we always like to target those with the strongest relative strength or relative weakness compared to the overall market, because those generally are going to present some of the best trading opportunities for you. So we had identified this one here a number of months ago. We've traded it with several different occasions, several different trade alerts sent out to our members. And so let's go ahead and hop right into the actual price action chart for Coherent. Again, you can see the very powerful price action and very powerful uptrend that Coherent has been in for much of the past year. A very strong series of higher highs and higher lows. You can see the actual trend line buy signal kicked off in May of last year, and it's remained intact ever since. For much of that period of time, you can see this stock price is traded above that level as well. So very, very strong price action here from Coherent. It's a great looking trend. It's exactly what we'd be looking for, trying to find those relative strength winners across the market. And so, as I mentioned, we've been sending out several trade alerts to our members in our Champion Trade Alert service. And we've actually been trading this one with a very strategically set up options trading strategy that, regardless whether Coherent continues to trade higher, actually remains trading flat, or even sells off by a bit. Given the market volatility and uncertainty right now, we like to have a little bit of that cushion built in some of our trades. So utilizing this very strategic strategy, we've sent out these alerts to our members, and we've continued to have some great opportunities using this strategy for Coherent. And in fact, we actually were able to roll over one of those past trade alerts here just in the past couple days. Just earlier this week, as you saw, the stock was pulling back off of its all-time highs, was consolidating near the middle Keltner channel here. It was actually right here where we actually sent out the alert to our members to go ahead and close out that existing trade, roll those profits over, and we spotted a great brand new opportunity for Coherent to go ahead and open up a brand new trade alert for this stock. And of course, Coherent very quickly continued to power higher. It's now starting to push back up against those all-time highs. And, with the way the stock has been trading, I certainly wouldn't be surprised to see it actually go up and trade through and break past those all-time highs here. But because of this very strong price action, this trade alert for Coherent is, of course, continuing to trade very well and is sitting on a very nice profit opportunity as I'm recording this video right here. And in fact, as of the market close on Thursday, this trade alert that we sent out to our members for Coherent is sitting on an open trade profit opportunity of 76.3%. And also, too, please keep in mind that the initial trade alert that we sent out to our members for Coherent was only just a couple months ago. So seeing this trade sit on an open profit opportunity of north of 70%, certainly given the market backdrop where you're starting to see some really tough trading at the headline index level, that is certainly a very nice profit opportunity given the broader market conditions. So I certainly hope that you're able to follow along with that trade alert and benefit from this very strong price action from Coherent and from that trade alert. But if you are not, that's totally okay. I'm going to go ahead and share with you now how you can make sure that you begin receiving trade alerts just like this one for Coherent that I've shared with you here today, because we're spotting some great opportunities still across this market. We have some great opportunities keyed up, and we could be sending out the next trade alert possibly as soon as today. So if you want to make sure that you begin receiving these trade alerts from our Champion Trader Trade Alert service, this is how you can do it right here. Go ahead and reach out, give our team a call, dial up the office at 310-647-5664. Go ahead and reach out to the team. They're a great team there. Please feel free to ask them any questions you want to about the Trade Alert service, about the strategies, the different trade alerts, things like that. They're there to help answer your questions. They're more than happy to help you out. And most importantly, they can go ahead and get you signed up to begin receiving these trade alerts just like the one I've shared with you here today. So go ahead, reach out to the team today. Go ahead and get signed up to begin receiving these trade alerts. Now, to go ahead and just wrap up the market update for this week, things that I'm keeping my eye on, we've already gotten the Fed meeting out of the way. We had a pretty hawkish tone. The Fed chair struck up at his meeting and his press conference following the actual meeting. While the Fed decided they're going to leave the rate policy unchanged, certainly the hawkish tone that the Fed chair had in that meeting, was not something that was really a great benefit to the market. It was actually just adding some further pressure. Actually saw some interest rates and yields rise on the back of that. So that was certainly adding to the pressure, pushing the equities to the downside. So, that was a major market catalyst. That's now behind us. So looking forward, there's not really too many earnings on the horizon, really not too many macroeconomic reports out there either over the next couple of weeks that could be that major market catalyst. So I think we're likely looking at just, a market's going to be leaning back on the technicals, leaning back on the headlines, unfortunately, much like we've seen here over the past couple of weeks. We've really gotten into a very headline sensitive, very headline driven market, certainly because of some of the geopolitical uncertainties out of the Middle East. So I think that is going to continue to largely be the straw that stirs the drink, so to speak, for the market. So, fully anticipate some further volatility here in the weeks ahead. Probably going to see the market reacting quite volatilely to any headlines that are coming out of the Middle East. And of course, it's impossible to predict what some of those headlines might say. So we're keeping that in mind. We're spotting trade opportunities out there, trying to be wise in the risk management aspect of picking different opportunities out there. So that's going to be the main thing that myself and our team are going to be watching very closely here in the weeks to come. So with that, that's just about everything I want to cover for this week's weekly market update. I really hope you enjoyed watching this. Thank you so much for tuning in. I really appreciate you spending some time to watch this weekly market update I put together this week. I really look forward to putting this together for you next week. There's certainly bound to be a lot of headlines and things moving the markets between now and next week when I'm able to make this next recording. So I hope you have a great rest of your week and weekend, and I'm looking forward to see you back here soon. But until then, take care. Thank you so much for tuning in.